Good day, ladies and gentlemen, and welcome to the CEB Leadership Council for Legal Executives webinar entitled Building a Cost-Effective Legal Network. At this time, all participants are in listen-only mode. If at any time during the call you require assistance, please submit your question through the Q&A box on the platform. This event is being recorded for replay purposes and may be made available on the CEB member website. Please contact virtual events at cebglobal.com with questions. I would now like to turn the call over to Catherine Schell with CEB. Please proceed.
Thank you, Courtney. Hi, everyone. My name is Catherine Schell, and I'm a Senior Executive Advisor at CEB for Legal Executives. I'm joined today by John Albright of Hub International and David Holme from Exigent. And today we're going to talk about how Exigent helped Hub take their lease portfolio and turn that into financial outcomes. I'll give a bit of logistics about the session as well as some background information on what CEB has seen in terms of the legal services market. And then I'll turn it over to David to talk about Exigent and David and John to talk specifically about their project. As Courtney mentioned, questions can be submitted on the web platform. The links to the platform to view the presentation can be found in your registration email. If you have any issues, please reach out to virtualevents@cebglobal.com. So now, just for a bit of background on the webinar series, over the course of the spring, we've heard from a few different vendors and their clients about what specific projects look like, how others within our membership might be able to use these types of vendors and others. And we're doing these webinars for our general counsel and other legal executives who are interested in working with a new provider or determining whether a particular service provider might be able to help or what a project might look like. We'll have at least one more session this month, but we'd love to hear from you about whether this has been a helpful series. So please feel free to send me a note with your feedback. My email address is kshell@cebglobal.com. Feel free to let us know if we should reach out to a certain provider that you have in mind or you're interested in, or if you're looking to complete a particular type of project. So now a little information on our panelists who are in Hub's offices in Chicago today. So first we have David Holme, the CEO and founder of Exigent. Prior to founding Exigent, he specialized in corporate finance and restructuring work. He headed support services at Bridgepoint. He has a variety of experiences. I've certainly enjoyed getting to speak with him as we've been planning for this session. Thank you, David, for joining us.
Thank you.
We're also joined by John Albright, the Chief Legal Officer at Hub. Prior to becoming Chief Legal Officer at Hub, John was the SVP, Global Legal and Compliance Director at Information Resources, and also the General Counsel for Accenture HR Services. And John, thank you so much for joining us today and for hosting David in your office for this session.
You're very welcome.
So the three things that we're going to talk about as part of the session today, as I mentioned when we first joined the line, I'm going to give you a little bit of background from our research on what we've heard from you all on the line about alternative legal service providers and the legal service market. And then David will provide us with an overview of Exigent, and we'll also spend some time talking about what Hub and Exigent were able to accomplish together and really hear more about the specifics of that project. The slide that we are looking at over here on page 6 might be familiar to those of you who have listened into this series so far this spring. We're looking at a couple of different things on this page. So first of all, the larger pie where it says 44% of legal departments have their spend in-house, 44% of legal departments have in-house spend, 56% of spend is outside. This comes from our recent State of the Function benchmarking exercise. We've combined that with information on the right that we gathered when we were doing research a couple of years back about how to actually improve the quality of the services and the work that you receive from your law firm providers. And what we've seen year over year is that a very small proportion of budgets is spent on alternative legal providers. Most spend is still going to external law firms. We're also seeing a lot of rate increases year over year. Our recent real rate report saw on average a 5.4% year-over-year increase in law firm rates. That's actually much higher when you look at just associate rates, which is somewhere around 7% year-over-year. And yet we continue to hear that everyone on the line has mixed satisfaction with law firm quality. Only about 70% of people said that outside counsel is even accurate. I hope that's actually not the case for anyone on the line, and I know that you have a lot of great law firm relationships that you will rely on. But we see some of these other numbers about whether or not the work is actionable. Less than a third of you say that it is. Is it risk aligned to what you're looking for? And no surprise to anyone, very few people find that their law firms are providing cost-effective work as well. A lot of this is about finding the right service or the right provider for the job. What are you actually looking to accomplish, and who is going to be able to do that particular project for you in the most efficient way? So David and John, given the nature of the conversation that we're having today, what about the law firm model in your experience has opened up the market for new providers?
It's David here, and so thank you for everybody that's joined us today. Well, I mean, we are a provider of alternative legal services, so and we very definitely aren't here to bash law firms. We work in conjunction on a number of projects with some of the big US, UK, Australian, Canadian law firms like McCarthy Tetro, Morgan Lewis. I think some of those numbers are a little understated because there's a pass-through of a lot of the projects that we do, which would come under kind of external spend. I'm probably not the right person to talk about the quality of that legal advice, but I can say that one of our services that we offer, and we've just completed a review of 2 deals worth $2 billion, and what I would say is that the accuracy of billing is extremely poor, particularly by US law firms. And I would say some of those numbers are significantly overstated just for that very kind of very singular issue. I think what I can give you is a global perspective of the sort of law firm model, and inevitably in an age where disruption is driven by a desire for efficiency, the very nature of law firm billing is inefficiency. I mean, that's not news to anyone, and is dependent on leverage of those individual kind of associates. I think that model is under severe strain. I find it incredible in a zero inflation environment that 5.4 is the correct number. I mean, it's your survey and I'm sure it's right, but what you find is that 5.4 gets clawed back in the kind of in the billing stage. John, what do you think?
Yeah, I mean, nothing in this pie chart was surprising from our perspective. We mirror this. We're higher on the outside spending, but it's probably still high single digit. I mean, and again, we still heavily rely on the external traditional law firm model, and will do so for years to come. I mean, what we've looked at here is we want to optimize the resources for the task at hand. And if you look at the satisfaction survey, the initial and probably still single biggest driver of that was cost. If we can do something for less money, whether it be offshore or, as we're hopefully soon, artificial intelligence or automation, we're very interested in that because like many corporate legal departments, on a good year, we're being asked to do more with the same. So how do we do that? We take lower level tasks and either bring them in-house, which was the older model. I can go hire a lawyer to do that or a paralegal to do that for less than what I'm going to pay my law firm. Or what we have done is we have increasingly relied on legal process outsourcing. And what we have found, again, going back to the satisfaction survey results, is they have become more actionable, and part of that is because we've integrated LPO into our business processes. And you could easily do that with a law firm, but it quickly becomes expensive, and according to this, 5.5% more expensive year over year. With an LPO, where you may be on a transaction-based fee model, where you're just paying by the transaction and not by the hour, You can fully integrate them in. They learn your business in a more intimate way than your traditional external law firm does. And we have garnered more value and business insight out of that we really didn't anticipate when we initially went into this.
I think the alternative providers are changing. You know, they're what they were, and we're probably sort of getting on to the next slide really, but what they certainly our firm was like 10 years ago is a completely different model to now. So the challenge to law firms is that the external alternative providers are changing faster than the law firms themselves, and you know, they're much more interested in developing applicable technology and applying it than law firms typically are. So you tend to be more interested in things that might be able to automate small pieces of easy advice. They're not interested in the business application of law so much.
Absolutely.
Yeah, I think there's some variation by the law firm, but I think generally that there's some truth to that. And I think those that are more aggressively embracing change, there are some law firms out there that have started consulting arms that are kind of somewhat separate and distinct, is what they see as maybe a bridge from the LPO to the legal model. But where I think you're seeing the big differentiation on the legal process service providers is their embrace of technology.
Yeah.
And you know, the follow-on to that will be automation.
Which probably brings us on to the next slide.
It certainly does. So I think that what you're describing is what we've heard from a lot of our members. A lot of this conversation is about finding the right provider for the service or the project at hand, and different providers have different expertise and bring different things to the table. David, you mentioned this just a couple of minutes ago, but we've seen quite a shift in the legal market over the past couple of decades. A lot of LPOs or alternative providers started as labor arbitrage. They were working on specific tasks. They were in various locations that could offer lower cost services, particularly for highly routine work. And then, of course, we've seen more and more of these providers adopt technology in a way that can actually enable process improvement, focusing on things like contract drafting, creating playbooks, legal research, patent filings, the list goes on. And then, of course, we're just on the brink of this next era where we're really come into the AI space and that automated problem solving. You alluded to this, David, just a couple of minutes ago, but maybe you could talk a bit more about how Exigent has actually shifted since its founding in 2003.
Yeah, I'm definitely not going to go back as far as 2003. My memory is a little fading a little, but you know, we knew from sort of 2008 really was when there was a massive pressure on firms to think about lower cost models, and I think that came through after the financial crisis. But quickly on the heels of that was the idea, and we certainly changed our business model when we made an acquisition of a large tech company in India in end of 2013, that actually, in a sense, we recognised that some of the tasks that we were undertaking, such as contract review, document review, etc., were going to be overtaken by technology. So we decided that we would aggressively adopt a strategy to build business-based technology focused on the corporate space, say in contract management, contract drafting, contract automation, etc., that the corporate end of the market would adopt, and we probably pivoted very significantly at that point away from law firms, because they tended to see us as a low-cost alternative, and in some cases were setting up kind of a captive in wherever, Bangladesh or whatever, and we realised that was not our key and core market. Our core market was to develop technology and actually put it in place as a service that would enable corporates to get commercial benefits. We just simply figured that selling commercial benefits was actually easier, more long-term, more attractive than selling a sort of a cost-down model, which was not moving. It's very hard to shift the dial on profitability. John, is that a fair summary of kind of how you saw the market as well, or what do you think?
Yeah, we were looking at it probably even before 2008. I came from a business process outsourcing background, so when LPO first emerged, it was something that was very intriguing to me. But our needs historically have been more transactional than litigation driven. So we had to wait for LPO to catch up, to develop the products and the technology platforms to actually deliver viable and reliable solutions on the transactional side of it. Our initial focus, as Catherine alluded to, was labor arbitrage. In the BPO world, we called it our mess for less, or if you're the provider, your mess for less. But
our mess for less.
But the LPO model really has evolved, and now we have them coming in, integrating into our business processes, offering improvements on those processes. Before, we were kind of telling them, this is what we want you to do, this is how we want you to do it. Now they're coming back and saying, well, we think you could be more efficient and drive better consistency if you did it this way. And then adding on to this, as we'll get into later in the conversation, is with the technology and the analytics platforms actually driving new value and insights to the business, which historically the legal departments have not done.
Yeah, I mean, I think that's a sort of maturity thing, isn't it? I mean, if you look across since 08, 09, and the emerging disruptors, if you want to call it that, there's people like Cognition and Axiom. There's the resourcing piece, and then there's also the over $1 billion last 2 years alone going into legal technology startups.
Yep.
That's an enormous disruption. And then, of course, you have the kind of apex predators, as I think of them, which are the big four accounting firms, who certainly in certain markets have started to become managed services providers for e-discovery. They bought Cognition. They bought Wartsman's. They're the apex predators in the space. And so the disruptors, in some ways, are starting to get mopped up, either by equity funds aggregating them, or by the big four. And that's moving much faster than the traditional model, I think.
Yeah, well, the infusion of cash has definitely accelerated the transformation of the model. And I remember we looked at a contract management tool. This was going back 10 plus years, and they wanted $500,000 out of the gate just to put the platform on your server. And I was dead on slide 2. So
did you carry on after that?
I carried on, but I kind of the tea leaves were well read. But the reality of it is the infusion of cash has greatly enhanced the capability, but it's also brought down the cost
massively.
A lot of these technology platforms are now baked into a service deliverable, which eliminates my need of having to go to my CFO and saying, hey, I need $500,000 for this new toy.
Because new toys in legal rarely get to the top of the board agenda, right? So the interesting thing that we've noticed since 2013 is the amount of open source code on the market, even from people like Facebook and so forth. It's been enormously influential. We estimate that the cost of architecting and developing technology solutions has dropped by 80% in 2 years. So there's an infusion of cash, and there's a massive reduction in the cost of it. So
yep.
the opportunities for people now to architect different answers is humongous.
Well, these platforms are now available to any size legal department. The sole practitioner that's in-house, all the way up to the Fortune 1000, which, when there was a $500,000 investment up front for a contract management tool, a lot of them were making that.
Yeah.
Because they had the resources to do it. For the rest of us that may not be in companies that large, the technology is there, it's affordable, and it's more capable than ever.
Yeah, I think we'll come on maybe to this on the next sort of slide, if we could just move on to that. I think the title probably needs adjusting a little bit. The alternative legal providers and the discomfort is probably one for you to talk about, but I think that's understandable 5 years ago. I don't think it's particularly understandable today. But
and David, you bring up such a great point actually here, because it was something that we were surprised about as well. The reason for the title on the slide and the use of the word discomfort is that we actually kept hearing people say that they were uncertain about who to use. And John, you were alluding to some of this as well. People aren't sure about the type of financial risk that they're taking on. They're very concerned that they are going to have to go to their CFOs. They're also concerned about the quality of what they'll be getting when it comes to the particular service or project that they are looking at. And then, of course, we all can fall into this third bucket. We can be resistant to change, at least at points. We think we've figured out something that works for all of us, and it can be difficult to adopt a new solution. And David and John, I'd love to hear in just a second how you respond to some of this, because I'm sure it's not the first time that you've heard these types of objections raised. But I also would like to remind everybody on the line that there are a couple of questions here that they can think about as we're going through this presentation. Think about your own workflows and processes within your own legal department. Where do you see a potential benefit from an alternative provider? Who on the team is going to support you if you take on a new approach? Who's going to push back and raise some of these questions, and how are you going to respond to them as well? And then also that final question, what's the benefit that you're going to need to show if you are going to push to rethink how you perform certain tasks? And it may be that it's an answer to a question that's already been raised, but as we'll get to much later in the presentation, it's also important to think about your objectives before you actually embark on, process improvement or a new type of project or using a new service provider. So now, David, I'll step back and I'll ask the question that you were starting to answer just a minute ago. How do you respond to some of this uncertainty when it is a prospective client or when you are talking about people and their view of the alternative legal provider industry?
Well, I think firstly the alternative legal provider industry is now merging very quickly with the technology provision piece. And so with that, I've increasingly found that people are less interested in talking about this whole idea of swapping labor, because that's changing. The way that alternative providers are now integrating tech into their offering is it makes it less emotional. The kind of risk profile around financial and performance risk, largely, I have to say, in the last 2 years have dissipated very significantly, because I think it's typical of many professions, but particularly the legal industry, if you can point to a TD Bank or a Bank of Montreal that's already doing it, in a sense that's your greatest kind of cornerstone, that's your greatest endorsement. I think it's probably one more for John actually than me, because I can tell you all day that there's no risk at all associated with this, and every alternative provider is brilliant. Of course that's not true, but nor is that true of anything else that you buy. But John, what do you think?
I think that's fair. I mean, until you have done it and you've had some success with it, it is a little daunting. And going back to my days in business process outsourcing, all the way back to 2001 when BPO was in its relative infancy, we were going into large corporations and saying, hey, why don't you shift big chunks of your HR function to Bangalore? And that was not an easy conversation to have, and it was a multiple step process, but more often than not, when we would take clients to tour the Bangalore facility and to see all the controls and processes and capabilities that were in place there, even relative to what we may have had stateside, they came back and 9 times out of 10 said, what more can we move there? And a big part of that was it was $25 an hour versus $125 in Indiana or wherever it may have been. But they had to get comfortable and they had to see it in action. And depending on what you're outsourcing, you may not hop on a flight to Bangalore, but you obviously have to get comfortable with the vendor, the LPO provider. Have they been in business for a while? We used to look at, when we were looking at vendors, turnover statistics, retention. You always heard about people being hired down the street for $1 an hour more, and all of these tales of lore in the BPO and LPO world, and that's still relevant, but increasingly we're looking at the technology assets first, and when we look at why we ended up with Exigent, there was a dual consideration there for the project we're going to talk about later. And if a firm comes in with strong technology, that technology is one of the single biggest drivers of a control around whatever process you're outsourcing. Yeah. And that was a big consideration for us.
And there are so many options now that you're not pushed down the route of going to one particular geographical location. It can be, they call it farm shoring, I think. There's farm shoring as well as there's offshoring. The physical location is becoming less relevant. it's the mix of expertise and technology, and that's a key part of it, John, I think.
Agreed.
Mm-hmm. And that brings us really perfectly into this next section where, David, we'll turn it over to you to hear a little bit more about Exigent. And John, of course, also please share what your experience has been, what you actually were attracted, what attracted you to Exigent, and what you were kind of thinking about as you were first hiring David and his team. So, David, I'll turn it over to you.
Okay, well, I'll try and make this pretty brief because, this isn't really an advert for Exigent. I fully recognize that most people joining this call want to find out how to do this stuff and get the results that we're going to talk about a bit later. So I do intend to kind of slightly skip through these, if that's okay, and rely on John to back me up, hopefully. And if he doesn't, then it'll be the end of a beautiful relationship, of course. We're a business that services both kind of corporates and law firms globally in every major English-speaking jurisdiction. Probably a couple of things that are notable as far as we are concerned in terms of our strategic direction. One is the delivery of technology, but also as a service. We have seen far too many examples as we go round our various clients, and there are many or most of them are multinationals, where they've bought technology in isolation, and that technology has been horribly underutilized. And I'm thinking here about plugins like Ariba to SAS and Taurus to IBM. More banks than I can count on one hand have got, say, contract management systems that they've spent enormous sums on, and then spent $10 an hour for a student to populate them. And the problem with that is, it's understandable because they don't resource the technology appropriately, and that's one of the things that's brought us to a sort of strategic direction, which we'll come to on the next slide, about Chameleon, which is it's adding those full life cycle bolt-ons, but offering that as a fully delivered service. Truth is that most people don't think about the legal function as part of the end-to-end business process, and that's the key thing for us. What we are trying to do is provide a set of tools that can fit into that business process and operate those tools for them. So you might think of contracts in that context, and Chameleon is a contract management tool that actually extracts huge amounts of data that's entirely applicable to the entire ecosystem of the business. Is that a fair sort of summary, John?
It is, yes. I mean, if you're looking at outsourcing to an LPO or an alternative service provider, whatever term you want to use, for the first time, you really have to identify a contained project or process that you're comfortable shifting offshore. If you look at what we did here at Hub, the first thing we shifted to Exigent was actually corporate governance filings. We have over several hundred legal entities, and we have annual reports and associated filings and everything that is required for each of those, across multiple jurisdictions. So that was the first thing that we opted to outsource. We let that test run. That was successful. That gave us more confidence to go to the next step. And again, if you're looking at this, we didn't go right into our operational environment. We looked at leases. And if you look at an insurance brokerage, our single biggest expense is compensation, but our second largest expense on any given year is occupancy expense. So leases were something that we had a significant quantity of. We have over 400 properties with associated leases. And they represented an opportunity for the legal department to really drive some new insights and value into a significant expense for the company. So if you looked at what our legacy was when we were looking at this, we had two primary brokers that managed this on two separate and distinct technology platforms that they brought to the table. So we had some insights into that, but we didn't have a fully integrated global view. And we were looking at 15 odd data points on a lease relative to something we wanted greater and deeper insight in, that we could run more detailed reports. So in looking at that piece of it, that was the technology component. When you move to the labor arbitrage piece of it, we were doing either in-house or outsourcing, depending on capacity, the initial lease review, which was costing us, depending on the complexity of the lease, it could run into the several thousands of dollars to redline. Because the challenge with leases, unlike service agreements that you may have in-house, is they're on landlord paper. So you don't have a standard form or template. We obviously had standard terms that we like to see in those, and we would negotiate to that. So it was somewhat of a mechanical process, but it wasn't cookie cutter. And it wasn't really suitable to an AI-type solution where we were using a computer platform to generate a form. So we looked at that component with the legal review and the indexing, and this, to the labor arbitrage point, landed in South Africa, even though Exigent does have facilities and resources in India, because we saw that as a higher quality level of legal review, maybe more stability, and it gave us confidence that if we are shifting this from a law firm, it was kind of a middle step than going, completely to India, which would have been more cost-effective still. But the cost savings there was dramatic relative to what we were paying law firms, certainly, and it freed up internal resources that may have been doing that to do more strategic and value-add work. That, coupled with the fact that we now had a global view and we're tracking more than 150 data points per lease, gives us visibility into our lease stats and occupancy expense that we just never had before. So it was really transformational out of the gate, and now we're still learning all the things that the new toy, so to speak, can do for us.
Yeah, and I think it's worth noting that we deliver that as an information service, effectively. We're doing obviously the negotiation of the lease and the renewal, not always, but in many cases, but we've mixed that with people with commercial acumen. So we have a director of contract optimization who's a finance person, and they mix that with the legal expertise to look at these sort of further insights. And probably on the next page we'll illustrate that a bit more clearly. The ecosystem really is built around the internal workings of a corporate. So if you sort of go around in sort of from procurement to legal, the information we believe that in contracts and in the Chameleon ecosystem, there should be kind of one single data set, because that means that procurement, who may be in charge of negotiating, not always, but maybe, or the external brokers, have the same information and work from the same information as finance, and finance work from the same information as legal. And really, regardless of the actual individual working parts of the Chameleon ecosystem, it's singularly about getting the singular reliable data set that all people can rely upon. And sure, you can enhance that with integrating with accounting systems and so forth, but we're a step away from that. Is that kind of a fair kind of summary, John?
Yes. I mean, if you look at, and I think we may be getting ahead of the slides, but if you look at the data set we now have on our leases, it's largely internal data. The next evolutionary step is to bring in market data and other data sets.
Absolutely right.
That, there's probably a number of folks on the call that are leveraging an e-billing solution. And one of the big value drivers that kind of led us to make that investment, in my prior life, it was already in place here when I joined Hub, was the market data and the analytical data you can get, comparing your legal spend either by law firm or by subject area against a broader market. That's the next evolution where we take this, and once you have that market data fully integrated in, you have an even more interesting story than what we're currently telling.
Yeah. And I think on the next slide, which we are going to kind of skip through because we are getting ahead of ourselves and behind time a little bit, but if we could just maybe quickly look at the next slide. I mean, this is a fairly blatant advert for Chameleon. I'm not going to lie to you, but why wouldn't I take the opportunity? But as I say, I think the key for us, and anyone can find this Chameleon stuff, online or on YouTube, but the key for us is providing it in a way that enables people to free up resources. It actually isn't a traditional LPO model that displaces internal staff. It actually supplements it with information, and I don't think, unless I'm wrong, I don't think you've let anybody go as a result of the Chameleon or the other initiatives that we've followed.
No, we have reappropriated resources basically. So, and we rarely go into LPO discussions looking at force reductions because probably like most legal departments, we're thinly staffed to begin with.
Yeah.
So this basically again allows us to do more with the same as we suggested earlier. And if you look at how we're funding the lease project, there's an internal expense that you could say was a sunk cost because we're already paying those resources, and we still are. But what we are saving from licensing fees from the brokers, as the case may have been, or from law firms that were doing that initial legal review, is how we have funded this, and we've been able to redeploy the resources that were doing a lot of that lease review to higher value work.
It's always interesting to me when I sit with general counsels and we talk about their kind of contracts as an asset base, and very, very regularly I hear somebody say, well, we only track, or we only need to look at 20 data points. And when you look at something that's relatively straightforward, like a property lease or a carrier agreement or whatever it is going to be next, I think we've all been surprised over the last couple of years that we've found it to be 160 or whatever the number is. It's around 160 times by 500 leases. This is a massive amount of data that is hugely applicable. Did you think it was going to be 160 when we started down this road?
When you said that, to be honest, I thought that sounded like overkill. And we're still trying to, again, figure out how we're going to best adapt to that. But if you look at what those data points drove us to do, is integration of Chameleon into Oracle or ERP. Because if you look at if we're trying to get a view of total occupancy expense, rent is just one component of it.
Right.
And if it's a triple net lease, it's only one very distinct component of it. So in order to ascertain full occupancy expense, we needed to standardize how we were reporting that in Oracle, and because some regions were just baking it all in as rent expense, when in reality others were looking at if they were paying taxes and if they were funding all of the external building maintenance or other aspects of it, common area maintenance. That was in a separate facilities line item. So it's forced us to standardize internally, and for the first time, we now have a true cost of occupancy data point that we can look at.
And so, John, just sort of interested in that. So, and I think I really think that's a really important point, because what you're saying is to optimize the use of the data or the data points as we've described them. Actually, for internal process improvement is just as important as the piece of technology.
They're vital. The technology is only as good as the data that's in it. So you could have the fastest contract management platform out there, and if the data is bad, you're not getting the best picture. And what this also gives legal departments is an opportunity to do is partner with other parts of the organization. If you look at this lease project, it's a three-way partnership, not even counting the end client, which are the folks that need the leases, the internal folks that need the leases. We partnered with finance and procurement, and it kind of brought three distinct pieces of the organization that were operating not in a vacuum. That's an unfair characterization, but to slightly different drum beats. We're now on the same sheet of music, and everybody is. When we need a report on leases, whether it's coming out of finance, coming out of the field, coming out of legal, or coming out of procurement, they call Exigent, and Exigent runs that report. So we now have a single resource to get this data and extract it from the database.
Well, I think that's really interesting, because in this model we get as many calls from the COO or finance as we do from legal to run the report, and that's the interesting piece. Even though it's easy to use, most people just want to pick up the phone and say, can I find out X, run a report of Y. And that's, I think that's where the magic is. Our vision, part of our vision is to think of having this, almost like a data department. It's almost like a new function which manages data on behalf of the stakeholders who've got different responsibilities.
That's right. And our external brokers are even calling you when they need a report.
That's right.
So it's...
So before we get into the specifics of what Exigent did for Hub, I do want to show everyone on the line slide 16, because it plays into what both of you were talking about, the fact that there's actually a lot of data within the organization that we don't tap into. It's not just valuable to legal departments, it's valuable across the organization. And I also have conversations every single day about how to prove legal's value, how to make sure that legal has access to the right information. So I just wanted to pause here, and David, I'll get you to kind of walk us through this slide. But here we are talking about how you can actually, wrap your brains around data and use data in a way that's going to be helpful for the broader organization. So David, if you wouldn't mind just giving us a little bit of background on this step-by-step value creation.
Sure. Yeah, we just had to put we managed to put the computer to sleep, so just put that back. It's now fully awake. But yeah, I mean, this is just a practical step-by-step really guide. But in a funny sort of way, it's sort of the wrong way around. The fifth slide, the fifth point there, which is making better decisions, is the only reason you really want to be looking at data. I'm an accountant. I'm not clearly not smart enough to be a lawyer. The way we see it is to say, well, okay, what are the 15 or 18 different things that we might want to know when we're entering a discussion, negotiation, enforcement of obligations? And it's almost like you start with a whiteboard session before you dive in and start extracting data. Most of the time, I go to places where they've actually implemented a contract management system. They've had a very narrow view of what can be done with the information. They haven't really brought in the other stakeholders, which John talked about. And that is a critical mistake, absolutely critical mistake that people make all of the time. So before you start with getting a student, or in these days an automatic tool that we have to start that data extraction process, you really have to have a vision as to what might be possible. And we're going to come to that pretty quickly about what has been possible from extracting that and getting that data extraction strategy right. I would honestly say, in simple terms, that the best thing to do is extract everything. Like, just leave the skeleton behind. John, do you think that's fair?
I mean, look, the more data, there's no having come from a data company, there's no such thing as too much data unless you can't manage it and effectively sort through it. Yeah. So, and you also have to look at the cost benefit of it. I mean, we probably could have gone to 200 data points on the lease, but there is a manual cost in indexing that. So I think you have to find that balance, and that's something that your service provider can probably help with. I think just further building on some of the points, David, in looking at making better decisions, I think historically when you looked at LPO, you were looking at how can I save money? Yeah. And that's still an aspect of it. And I would be disingenuous if I said when we were looking at offshoring leases, we didn't look at that. It was a critical element of it and a material element of it. But equally critical and material was the business objective, which was, and again, it's tied to saving money, but it's outside of the legal scope when you look at lease expense, understanding our leases, understanding the data, and better leveraging that to make better decisions down the road. And those decisions, as we'll get to, I fear, Catherine, we may have already gone through slide 20 through 24, but as we get to that, those decisions were enabled by the 160 odd data points we now have access to.
And a key part is get the data extraction right, but then format it in the right way. I mean, I think within the next period, the actual extraction, the next 12 months, data extraction is going to get easier and easier with OCR technology. So people will absolutely, and already can in some cases, extract mass amounts of data automatically, but it's got to be formatted before you can analyze and use it. Increasingly, the analytical tool that is really Chameleon. It's the repository that's the analytical tool. And increasingly, we're finding that visualization tools can plug into that. because visualization is becoming ever more important. You absorb information so much more quickly. You have to sort of build on it block by block.
I mean, the only cautionary point I would make around too much data is, in my prior life, we rolled out a new technology platform that just transformed the way people could look at data. It was a revolutionary step forward over what the legacy had been. And the initial reaction to that is, as we flooded the market with all this data that they didn't have before, it initially led to data paralysis. So the end user didn't know what to do with it. They're like, this is too much, and then they had too many points, and they weren't able to make decisions in a timely fashion, which led to a slowdown in the business process. That's why you have to have some level of focus when you're scoping it. And that doesn't mean you're not, especially if you go to AI and you're actually automating the indexing of the data, why not get it in there? But you're still going to want to focus on what you're looking at initially and tie that to what your business objectives are. Otherwise you could just find yourself bogged down in a pool of data.
Yeah, I mean, that's
Sure.
the way that our process sort of works. And we've just been working with one of the big North American banks on $1 billion worth of IT vendor agreements, and they simply want to know 20 things they didn't know before. Now that may pull in multiple data points, but it doesn't, as long as you understand the contracts and the business, actually we start with that process at the start, the whiteboarding, and
Yep.
If we just limit ourselves to knowing
What do you want to know and why do you need to know it?
Exactly,
Yeah.
and then the data just comes from that, actually, and that's quite a fun process, and that's where the value is. And we started out talking about LPO and so forth, and that's where we've moved away from and into this whole way of using information. Sure, use tools and cost-effective talent, but actually it's the talent is the major emphasis for us these days, in the same way as it has been for law firms in the past.
And if you're dealing with a third-party provider that's done this before, much like when we went back to the lease program, Exigent had done this before, so we were able to rely on their guidance. There was some hand-holding there that really helped us get to an end point much more quickly than if we were reinventing the wheel ourselves.
So
before we go on to the details of of what you two actually did together, I do have one question for you. We're talking a lot about data overload and how it's incredibly important that you think about the data that you need. I imagine that there are some of those on the line who are actually tracking quite a bit and have looked into their data, but what would you say to someone who hasn't actually done anything with their data yet? We have these bullets under the first point about data extraction. What's going to happen if we just don't do anything at all?
Well, I mean, I think I'd say 80 to 90% of people that I speak to have a sense that there's value in this mountain of data or information. I think, as John said, you can kind of, there's a sixth sense that that's true. If you limit yourself to what you think are the key challenges that would help you, then that, if you can limit it to 5 to 10 to 15 maximum kind of things that you want to know that you don't know, that's a good place to start. But you do need somebody who, to help you to sort of say, well, if you're, in order to get to that answer, you'll need to look at these types of financial statistics and calculations, and therefore you will need this data, and you can drive it from the business question. John, what do you think?
Yeah, I mean, I guess if you do nothing, there's what is the old cliche? Ignorance is bliss. You may not know what the opportunity you're missing out on, but it's hard to ignore. If you look at the insurance industry, that hasn't, depending on what aspect you're looking at, there hasn't been material change in that in decades. It is going through, both on the carrier and broker side, a transformation that is driven by analytics, that is driven by data. Carriers, through their actuarial modeling, have been using data for long before. This, however, gets more broadly than risk quantification or qualification. It gets to how they're running their business and how we're running our business, and it's hard to ignore it. But I guess theoretically, if your head was buried deep enough in the sand, I guess you could.
Yeah, I think it's a hard, I think it's increasingly going to be impossible to ignore the CEO walking into your office and saying, what is our percentage of X, or what is our Y, and to say, no idea, boss, give me 3 days, and I've got to go through 1,400 PDFs.
Right.
Everybody knows that this information is now increasingly available, and so you can ignore it, but it's, that's a career choice, I guess, isn't it?
It's such a great point because other stakeholders do think in terms of metrics and data. So even if we aren't actually looking within the department to figure out what we can do with the information that we have, we're absolutely going to get those questions from our business partners, right?
Well, yeah. I mean, John's probably better qualified to talk about that, but I can't imagine in any modern business that question can be ignored because you're in legal. That doesn't make sense to me.
I mean, invariably, and if one of our publicly traded competitors, has shared on their earnings calls that they are now monetizing data and actually, sharing that in some instances and maybe even selling that back to carriers. Data transfer before was largely one way because the carrier had all the actuarial risk data. We are now sharing data back with them, and having come from a company whose primary asset was big data, that was the core deliverable. Those were the shoes we were making, right?
Yeah.
In an insurance brokerage, data isn't. We sell insurance. We provide the best possible insurance products for our clients based on their risk and needs. But data is enabling us to do that better and more efficiently, and it's also further enriching the partnerships we have with our carriers.
Mm-hmm.
Yeah, that's
so now,
Sorry,
so I was going to just say, now we can probably get into some more of the specifics, which we have covered a couple of these things, but we can share with those on the line what you were able to accomplish. And John, I'll use your own words from earlier in the session. You actually wanted Exigent to help you understand your leases and your data so that you could make better decisions. So if you don't mind, perhaps the two of you could actually give a little bit more background or detail about what you were trying to accomplish and how you were actually able to do that.
Sure. So I think, where are we? That's 18.
Yeah.
So I mean, probably, John, you want to kick this off? Because really, it was kind of, we both came together with slightly different ideas.
Right.
We looked at it from a sort of data and analytics and kind of a really non-insurance specific or office specific objective. We run a framework we run a logic framework to when we're trying to help people analyze the opportunities in their contracts. We really just came to Hub to help them provide us with enough information on the business so that we could run that exercise. But I guess you instinctively had a feeling of what you might want to achieve, in the ether, so 10 and 20 kind of thing. When you sat down, did you have a specific number in mind?
We came into this. I was looking at this at a number of different levels. One was, how do we reduce our external legal expense and reallocate internal resources? That's the easiest one. That's the labor arbitrage piece of it, right? But layered on top of that was, how do we validate that this model, a shared technology platform model, will work across broader parts of the organization? In our view, that would be service agreements and carrier agreements, right? And leases, again, was something that if we didn't get it right, it wasn't going to disrupt the revenue engine. It just wouldn't give us the best insights into what our occupancy expense was. So we looked at it as this was a test run to validate the model to be deployed more broadly across the organization, because once you get into carrier agreements, that is the insurance carrier relationships we have is the lifeblood of a broker. Obviously in addition to our client relationships. But so we looked at it from that. Is this going to be a good model to validate? And once we got to a conclusive yes on that, we started to identify where could we drive value through this other than having some of the labor arbitrage benefits. And occupancy expense obviously fit in well again, because it was our second largest expense.
And was there a kind of an edict from the board, or did you just set yourself a kind of an internal target in the back of your mind? I mean, I always prefer to set my own internal targets because then I can fail in private. But did you kind of, think about this in those terms?
The edict has actually come since the board has seen what we can do, and getting to the point of we're not looking at all 160 data points. I'm getting ahead of the slides, but the first thing we're looking at is, are we optimizing our rentable square feet per employee? Are we efficiently?
So I can flip us forward if you'd like to talk a little bit more about that.
Sure.
John? Page 20?
Yeah, that's fine. So, we now had visibility into this that we thought was reliable and accurate, and it enabled us to go to our end client, which were the people in the field that needed the lease, that needed the space. And once we looked at this data, once we saw, because we had industry metrics, right? The industry is trending actually somewhere between 150 and 200 rentable square feet in large office spaces. So we had all of that, but we were getting, well, that won't work in a brokerage. And or that in whatever business you're in, go ahead and replace brokerage with that, because you'll invariably hear that, because we need this, we need that. And when we saw that we had regions that were exceeding the target we were proposing, that kind of debunked that theory that it won't work in a brokerage. And that got management on board. If we have this region that is at 180 average square feet per employee, why are you at 280? And it gave us the ammunition to go out and say, we should be able to manage to this. And this was a target that became that so-called edict or mandate that was handed down. Now, realistically, what we invariably learned and will learn is there are so many factors that go into optimizing occupancy expense. And, if you have to move to a new space and build out, even if you can reduce the space by 20 or 30% or even more, that may cost you more money than staying in place in space that may be larger than what you need. So, the reality of us saying that we're going to get to 200 square feet per employee across all of our footprint is not realistic. But it has us now asking questions that we weren't equipped to ask before, and managing to better end results.
And here's the sort of question, sometimes you hear, well, isn't that procurement's job, or isn't that finance's job, or isn't that the broker's job? Kind of, is that legal's job? And so I think it's really interesting that kind of you organised the data and then made this into an improved decision, or gave people a framework in which they could work. I mean, I guess there's a bit of politics around that, was there?
Politics is not so much politics, but if you look at when you're dealing with 400 to 450 leases, procurement is not intimately involved in every one of those. They get involved in the larger ones. We had legal, the end client, the person in the field that needed the lease, and the broker. And the broker, obviously, our brokers have been with us for many years. They understand our priorities, and we give them guidelines and marching orders. But the only other constant that was in all of those transactions was legal, because you needed a lease document or you needed an amendment. So we were the internal control point on that, and we remain the internal control point to this day. So we have taken on kind of what would historically, to your point, been a procurement play, because in many companies, procurement does own real estate. And kind of allowed legal to differentiate themselves and show how we're adding business value to a process, where before we were just, looking at legal language in a lease and saying we need to strike this.
Right.
So it's kind of transformed the optics of the department and risen its visibility in an area of the business that has a significant amount of focus, because it is a significant cost driver for the organization.
Right. And I mean, that's a question you hear a lot around the place, which is kind of how do we demonstrate value? And for my money anyway, you're sat on so much useful information that it's kind of hard to prove that you can't add value. Almost, it's almost the other way around. So does that mean you're sort of carried shoulder high around the office, John?
It depends on who you're talking to and how many square foot I cut from a person's lease. You're seeing an increasing number of programs out there as how can the general counsel or how can the legal department become a viable business partner. This is one path to get you there.
Yeah.
And it's one that really allows you to tackle a number of challenges, whether it's labor arbitrage all the way into that business partnership at one time.
Yeah, and once you start getting into this, you can then develop further tools. Maybe on the next slide we could just have a quick look at that, which is when you're looking at your portfolio of responsibilities, really what this is doing, and there's some algorithms behind this, which gives you kind of risk hotspots, if you see what I mean. So, and that can apply to any contract type.
That's right.
So, I mean, I think this sort of, there's quite a lot behind this rent level risk and rental rate risk and utility risk, but essentially at a glance you can see where you should be focusing your efforts on renewal or changing or moving and is that a tool that you kind of use?
It is, and we are decentralized. We are 26 different hubs across our geographic footprint, and real estate is something that is now a hybrid central control versus decentral control. But when you generate these reports, when you're in a sales pipeline culture, which obviously a brokerage is, there's a level of competition that goes to that. So you have folks saying, well, if that field can hit these targets, I should be able to hit them as well. So charts like this, and we obviously have scrubbed some of the data on this, so it looks like modern art probably from your perspective. But charts like this really help to not only communicate the message, but put into context that it is achievable, and you should be managing because you want to be on the more favorable end of this.
Yeah, if we look at the next slide, Kelly, I mean this is incontrovertible. The rest of the business, and this is why visualization is so important to us. Like the rest of the business runs on pictures, graphs, and charts. And this is an illustration scrubbed, obviously. It shows you with the offices taken out the percentage of savings by office. That's right. It's incontrovertible. If you can save 68%, the question is why aren't you doing it? What's strange about that? But I think you said earlier, and I think one of the things you constantly said to us is that the thing that you like about this actually is that you can ask different questions and more probing questions because you're not making any assumptions.
Well, different questions, certainly more relevant questions, and the data often takes you to different questions than you may have initially thought you were going to ask.
Yeah, and I think we put probably the next slide as well, which is kind of another example of why visualization is so important. The red and the green just tells you where your risks are and your opportunities are. So who's overperforming in this metric and who's underperforming, you can go straight to it. I mean, do you share these with your kind of COO? Is this do you find that visualization as important as I seem to be emphasizing?
For the COO, definitely, and for the commercial leader, definitely. And obviously, if it's a regional CFO, they're used to looking at spreadsheets and numbers. And but yeah, when you can see, and again, going back to that, that regional leader probably grew up in a sales pipeline environment. There's a competitiveness there, so they're looking at this and they're saying, yeah, we've got some management to do there, and we should be able to manage to this or that.
Yeah, and just without hammering the point too much, and otherwise we might put the computer and the audience to sleep. On the next slide before we start to wrap up. Just another example, really, of just taking that information and mixing it with another external piece of information. So, in this case, there are X number of offices in Canada. If we were to hedge, and this is the question: if we were to hedge those currency positions based upon forward forecasts of currency changes, what is the net gain or loss? I mean, are those kind of new questions, or I mean, you guys have got a slightly different hedging strategy, I guess. But.
Yeah, I mean, currency hedging, we tend, occupancy expense tends to sit in local currency.
Yeah.
So it's funded through cash flow in the region where it's incurred. But this is, this is a report that Exigent ran kind of on their own volition. It was interesting to see because, our hedging strategy is based on some higher level ideologies. But if you look at this shows real dollars based on an expenditure that obviously is a significant line item. So this didn't necessarily dramatically alter what we were doing at a strategic level, but what it did do was it started a dialogue.
Right, and I think in the same way as with if you mix the property portfolio data set with the HR, you've suddenly got occupancy. If you mix the kind of the exposure, committed exposure in certain types of currencies, whether it's Canadian dollars or pesos, with external data such as kind of forward exchange data, then you can get some quite powerful results. So I guess we're sort of, I'm not sure whether this is where we wrap up or you do, Kelly.
Well, I think that you have a couple of conclusions here on page 25, and I have a couple of questions for you as well. John, if you wouldn't mind sharing, what internal resources did you use? Who on your team did you connect with David's team?
So if you're looking at my core team, and again, this is very much cross-functional, if you're looking at my core team, there were 2 attorneys and a legal administrator that were meaningfully involved, substantially involved in the lease process. They continue to be engaged. They just have less of their overall percentage of bandwidth invested in it. Externally, procurement probably deals with Exigent as much as anybody, asking for reports, asking on status of leases if they're involved, and then our external brokers as well. So it's kind of what we've built. We have biweekly calls that include the broker. This is based on region. That include the broker, legal, and Exigent, and those we basically walk through active projects, prioritize, ask for status, and that is where, as I alluded to earlier, we have really fully integrated Exigent into the business process. So they are now the go-to on reporting and on a host of other things that historically we had to funnel through either an administrative resource or a lawyer on my team.
Mm-hmm. You both have shared some examples of pretty complex data and algorithms and outcomes as well, but given the level of detail that you were able to go into, how long did it take to do this type of analysis to get you information that you could actually act on?
Well, to be honest, the hardest bit was data extraction. Once you've actually completed that, and it depends a little bit on the state of the data that you've already got, actually the reorganization of data isn't that complex, because then you're into the fun bit, really, which is, what are the interesting things that we could learn, what are the actions we could take, what are the decisions that we can help you with by reorganizing the data. And the great thing, for our team they're mainly based in Cape Town, is, they enjoy solving business problems. We've created a culture where if we extract the data, then we will certainly come to any client with at least 10 insights they won't probably have thought of. We like to work collaboratively with our clients to think if we can make that 20, then it's sort of double the trouble, twice the fun. But the challenge is actually always in the extraction. I have to say that even since we started with John and his team, that the technology around data extraction has changed considerably. And we signed a partnership with an AI firm called LexPredict here in Chicago that will help us automate that. And then a second part of that is onboarding that data, which is another piece of technology altogether. But in truth, we just want to keep this simple for our clients, which is, what do you want? What do we think we want to know? How do you think? What do we think we can do better? And,
That's right.
And the rest, we will put that together for you. It doesn't matter if it's our technology or somebody else's. We'll put the package together.
And the data extraction is a big part of the upfront cost on this. If you've moved to a new matter management platform, you've already experienced that, and that's where we did have some discussion on whether it's 20 data points or 160, and we ultimately got comfortable with a higher number because we did see this platform evolving and our ability to leverage it evolving. But we also came to realize that since they were also doing the initial review in Redline, once we got past that upfront transition of legacy documents into the indexing, there really wasn't incremental expense associated with it. That's because right. They have to redline the document and they can index it in real time while they're doing that. So it actually we've invested for the future, because right now we're probably leveraging 20% of that, if that.
Yeah. There's more to be had.
And David, you mentioned this in a call that we had previously, but obviously you need a certain number of agreements in order to be able to get good information and do a good analysis. How many agreements do you typically need, or do you typically see coming from your clients that make you able to come up with these charts and trends and different?
Well, really, I think if you think that something like this has got in relative terms quite a simple document and has that number of data points, then really what we're looking at for something of this type is probably about 100 plus. You can get great value from analyzing 35 MSAs rather than 100 leases, and looking for trends, particularly if you've got large expenditure under those MSAs with SOWs and purchase orders. So the number of agreements is a bit misleading. The more complex the agreement, the fewer you need to identify opportunities. Where they're more standard, relatively standard, then 100 makes kind of sense.
Mm-hmm. And I would just to add on to that, I don't know that there's a magic number, but it's important to appreciate that you're going to be investing resources in building out these processes and controls as well. So, if you're going to all this trouble for 10 agreements, you're probably not going to see a significant ROI on that. So I think you've got to look at it not only from the business objectives, but also you're redesigning how you're doing something. I mean, we have shuffled the deck chairs around on how we get to a final lease, and you want to make sure that, and you're going to have some pain points as you're adjusting those processes to get it right. We will probably for the foreseeable future still be in a state of readjustment when we find something that works a little better here or there. Yeah. So walk into it with that understanding and make sure that there is a so-called pot of gold at the end of the rainbow.
There is at the other extreme. One of the global resources companies we're working with has a 20-year coal transportation agreement in Africa, and it's like a Bible. And the idea that can easily be managed without extracting that information is completely crazy. It is incredibly complex. So whilst we won't be doing trends with them, we will be making sure that the obligations under that massive agreement, it's like a Liber Arch file, are actually enforced. And there are complex algorithms in there, which how they got to, I don't know, about volumes, for example, and rebates and discounts and so forth. And so at that extreme, there's a different kind of value to be had by extracting that information and automating the alerts to make sure you get the maximum benefit from this type of agreement. So
you're functioning as a contract management resource in that context. Yeah, that's a fair point.
Yeah, which is a slightly different emphasis than one we've been talking about, but just as valid.
In just a couple of minutes, we'll also ask for feedback from everybody on the line. But if you do have any questions, please submit them using the Q&A platform. David and John, just a couple more questions for you from my perspective. You've mentioned how you want to improve the process going forward. What did each of you learn going through this project? Was there one key takeaway for the two of you?
You want me to start? Okay. I think we're still learning. I think the key takeaway is it's never going to be as easy as you may think it is. And we didn't go into this necessarily thinking it was going to be easy, but you're going to have, and we are hurting a number of different cats here. You know, we obviously have the clients in the field that can access and run reports from this database, multiple real estate brokers, finance, procurement, and lawyers. So getting all of those folks aligned and ready to sing off the same sheet of music. There's obviously some effort in that. You know, I think the biggest thing, and I don't know that it was much of a learning, but it kind of validated it. You really want to go in under promising and over delivering. You don't want to come in and say, I am going to cut your lease expense by 20%. And you know, anytime finance is reporting to the board opportunities, if we got everyone to 200 rentable square feet per employee, we're going to save X. I always qualify saying we won't get there. You know, I'm the rain cloud on the party, so to speak. So you got to be very, very careful to set realistic expectations for yourself and for your team, but also when you are pulling in the broader business, you know, this is what we want to do for you. This is how we're going to do it. And you know, I think we partnered well with Exigent to not overstep or get over our skis on that, and you know, because of that, I think we're actually delivering, you know, maybe more insights or value at an early point in the process than we had initially anticipated, and you know, that's being exceptionally well received because of it.
Mm-hmm.
Yeah, I think that's right. I mean, we are constantly evolving this product and methodology, and you know, what's been actually good for us is to actually work with a team that is sort of actually apolitical. It's not political. We don't feel like we're a political football between procurement and legal, which sometimes happens. But it's also handy to actually work with kind of teams that really understand that there is some value in this information, and you know, that's pretty exciting for us. If we were going to do something differently, probably we would set out the data strategy more clearly in support of our clients than we did at the time. I think 2 years ago we were still evolving that, and probably today we would be more definitive about the strategy for data extraction than we were at the time. I think we wasted probably a bit too much time, and this is entirely on us, by kind of constantly redefining and refining what we were going to extract, and that dragged the process out. So that's probably the mistake that we made.
Mm-hmm. So now is the portion of the conversation where we'll ask for feedback from everybody on the line. But as we do, I just wanted to provide a couple of my takeaways from this session as well. A lot of these conversations are about structuring unstructured data. And this is because legal has access to information that can benefit the organization. As John mentioned, we all want to have a seat at the table. We want to be having conversations with our business partners where we show the value that we can provide. And we do have access to a lot of this information that may sit in between various departments, or maybe information that we share with our business partners. A lot of these conversations are also about finding the right provider with the right expertise. What do you need out of a particular project? Who are you looking for, and who can actually deliver that as well? If you do have any questions after the session for either me, David, or John, please feel free to reach out to me. My name is Catherine Schell, again, and my email address is kschell@cebglobal.com. David and John, I really wanted to thank both of you for providing your insights, for giving us a sense of the projects that the two of you worked on, and for providing some more information about where the market is going and the benefits that you can see for legal departments currently and also in the future. So thank you both so much.
Absolute pleasure, and thank you for everybody for tuning in.
Yeah, absolutely. To reiterate that, thank you to everybody on the line. We appreciate your feedback and your questions. If there's anything that I can do for you, please let me know. Thank you so much.
Ladies and gentlemen, that concludes today's conference. Thank you for your participation. You may now disconnect. Have a wonderful day.